Hi guys, I'm Harry Yotis. I've been a professional trader for 20 years now. I started in 2005 working for National Bank Financial, one of the big six banks here in Canada. And for the past 10 years, I've been trading my own account. So let's get started with a daily market update for today, the 25th of November, 2025. Okay. We start with a picture of the S&P 500. We always look at the market first because so goeth the market, so goeth all our stocks. This is Wednesday. What a beautiful turnaround. What a beautiful turnaround. Okay. We were worried on Thursday of last week that this market was going to capitulate due to Bitcoin, and this was very scary, but because we didn't get this bearish engulfing pattern to continue, we were very bullish, and for the past 3 days, we've been justified in our bullishness, okay? The technical picture is looking very, very good for the market right now. Huge day today, up almost 1%. We closed above the close of this bearish candle, which is very good. And if you look at the 50-day moving average, the most important one, forget the rest for now. But the 50-day, we closed above the 50-day. We were worried when we closed below the 50-day that this pattern is broken, and it was. But, as we said in the past, these conditions don't have to stay under the 50 for a long time. Look, here it stayed for a little while before ripping. Here it stayed for a week before ripping again. It doesn't necessarily mean that this trend is broken. However, we really know why this happened. It's because of the Bitcoin move. And because I believe Bitcoin, let's look at it right now. The Bitcoin capitulation is pretty much over at this point because very low volumes after this big streak down. This alleviates selling pressure in every other asset that was used to raise capital. It was sold in the market, raised capital to pay for Bitcoin margin calls. So that's over, and Bitcoin could really stay at the bottom, whereas this technical picture now looks very, very good above the 50. I would like now for the 50, because it didn't on Thursday, I'd like for the 50 to hold this market. I would like for the market to hold above the 50, I should say, for a week or so, and then we're pretty much going to go higher, I think. My bullish sentiment for the end of the year is still on. Nothing has changed, especially since the Bitcoin capitulation is probably over. We can't say for sure, okay? And as you can see, we just don't look at the technical picture. We pair it with the sentiment, and sentiment is still at extreme fear everywhere. Market momentum is still at fear because we had this little pop for the past 3 days, but everything else is basically at extreme fear, okay? So we have plenty of room to go to neutral or greed, recycle this up. And if you can see, we can pop into new highs and still be fairly neutral in the market. Okay, this Bitcoin capitulation really set the stage for an explosion higher, especially since we got that capitulation day on the Thursday. Okay? It was not a continuation event. It told us that capitulation was over. Okay, how do we know? We don't exactly, but we put the odds on our favor. And for Bitcoin, we speculated that with this candle here, the big wick candle on very high volume, that all of this capitulation was probably over and it was being absorbed by big players. Now, Bitcoin doesn't have to do anything. You just stay here and the market could keep going up because the market is not dependent on Bitcoin, okay? So, technical picture, still bullish. Now, what was the big news of the day? Well, let's get rid of these. Big news of the day is that, is there an AI civil war brewing? We're duking it out. We have this headline that ruled them all today. NVIDIA says its GPUs are a generation ahead of Google's AI chips. Why? Because in the morning we had this come out. Okay. Shares of NVIDIA fell 3% after a report that Meta, one of NVIDIA's big customers, probably one of the 4 big ones that it has, could strike a deal with Google to use its tensor processing units for its data centers. So NVIDIA comes out and says that NVIDIA has more than 90% of the market. It's coming back, okay? However, if you look what happened here, let's break this candle down for the AI trend to be evident in the market itself. Okay, so let's go to a 10-minute chart of today. As you can see, this was the beginning of the day. Right here, this green candle, and then at like 10 minutes later, boom, big red candle. That's when the news came out that Meta was going to probably use, no, probably it's if, maybe, shoulda, coulda, we'll use Google's AI tech instead of nvidia's chips. So boom, but then the next time it was quickly bought up. Okay, because let's go out of the 10-minute into the day. As you can see, nvidia down, up on the day. Okay, but Google, new highs. So the tech war is starting between Google, nvidia, and all the US players. However, that doesn't mean that the AI bubble is bursting. It literally means the opposite. Okay, the AI bubble is still on, and it's actually now it's in its competitive stages. It's more spend going on. Okay, so you have Google at highs, you have nvidia coming back and still within this zone. It's not burst yet. It's still within this zone. Okay, you can even say it's still a retest after a retest of the breakout level. Okay, because this is really a zone, not just a line in the set. Okay, so nvidia still recovers, still doing well. Google we saw on fire. Okay, and what about the trade that we took yesterday? Let's look at Microsoft. Microsoft hit this perfect support zone, the previous high, right at the end of the Bitcoin capitulation. And you know that yesterday we took a position, long position. We sold a put spread, and it's looking very good so far. Okay, we would need continuation, of course, and I suspect it happens in the future. But so far, I think the AI civil war is strong, which bodes well for the AI trade, because that means there's no bubble bursting yet. Okay, so we just look at the evidence. We look at how fearful people were with the AI bubble bursting, and really the market is not even down 2% now. It made back. It's closing above this bearish trend. So the AI civil war is on, and the AI bubble is not burst yet. Okay, and all because of our Bitcoin play. This was capitulation. Okay, this is clear capitulation. So I'm not really buying Bitcoin here. I really don't care. This has been a lot of technical damage. So even if the capitulation is over, it doesn't mean it goes up. It could just stay here forever. Chop around, do this kind of chopping for a long 2-3 months. Okay, that's why I don't want to be in it. It's taken a hit, and you want to be in the things that were sold off to raise money for Bitcoin, which is the market. Market was sold off to buy Bitcoin, and it's going to recover, and gold and silver. So let's look at gold. Gold was sold up, bought back again. Okay, it's still really holding above the 4,000 level. This is very good for gold and gold miners. As you can see, this is the GDX, gold miners. This 67 here, if you look at the monthly chart, is the all-time high. Okay, see, this is the monthly chart of GDX, the miners. It reached that at 2011. Okay, so it basically had a retest of the breakout, retest of the highs, and going back up. Very, very bullish for miners. I mean, if you want to look at the history of something, look at the monthly chart. Okay, but it just tells you that it was a retest, the capitulation's over, and actually was going up this whole time as gold was going down. So it didn't really get affected as much. And if you want to know how the miners are doing relative to gold, you have to go GDX divided by GLD, and you have the relative performance. You can see for the past month, the miners have been outperforming gold, going higher. Okay, and I expect this ratio to go much higher, because as you can see, this is very low compared to what it was before. Okay, 2011, this ratio was, at least double this. Okay, at least double. So I expect the gold miners to continue to catch a bid. And of course, with gold here, let's make it clear here. With gold, you also have silver. Okay, and the silver daily chart is performing very, very well. People thought it was a double top. Is it? Maybe it's a cup and handle. We don't know. So the technicals, don't just base your trading off of technicals. This is stupid. Okay, this has a fundamental reason to go up, so you should be looking to buy it, okay? So, I mean, that's it for today. This was a very, very good day on SPY. Let's reiterate. We have a SPY coming through. This is 3 green soldiers, if you wanted to call it that. Another bullish reversal pattern. We have the nvidia AI war still going strong, with Google and nvidia battling it out, it seems, and every other guy, Meta, reaping their rewards now. Remember that the Meta drop was basically not just the market, but it also had a one-time charge on his net income here. You can see it lost its earnings. It underperformed the earnings by 84%. They were expecting 6, but they got $1. It's because of a one-time non-recurring charge, I should say. So that's why I think it's going to keep going up. So the AI civil war is on, but the AI bubble has clearly not burst. And it's all because of Bitcoin capitulation, probably over. And yet, probably this could be a dead play going forward. So we're not going to really get into this. We're going to stay with our SPY and with our gold. SPY meaning just market stocks, and with our gold trade, especially since we have SPY closing above the 50. I want to see this hold for at least another week, and we're going to be good to go to new highs, which I think we're going to the 7 to 720 area by year's end. Who knows? Let's see. So thanks for watching, guys. That's it for today. I'll see you tomorrow for another daily market update. So if this helped and you like what you saw, just please like and subscribe. And of course, drop a comment below, and I will gladly answer anything that you have to say. Maybe you want me to look at another AI stock, maybe something completely different. Let me know. So that's it, and looking forward to tomorrow, guys. Later.